go across the pond and take a look at what's happening in the economies of our good friends in Europe and the UK. Dr. Vania Stavrakeva joins us. She's a professor of economics at the London Business School. Professor, it seems like the U.S. economy is doing pretty well to the point where this Fed doesn't need to really do anything to kind of maybe, we've got inflation kind of running okay. We've got the economy kind of running okay. Just give us the 30,000-foot view of Europe in general, and then we'll dig down a little deeper.
So thank you very much for having me. Always a pleasure to be here. So indeed, there is quite a bit of divergence between the US and Europe, and definitely UK as well, which is due to structural reasons. So the German economy, for example, if you take the biggest country in the eurozone, is significantly different from the US economy. We would expect that inflation will be high in Germany, and would expect the inflation problem to be worse in Germany and to see stagnation or even decreasing growth, which is what the recent numbers show, based on a few observations. So first, the eurozone and Germany in general, are just much more open relative to the US. So if you take one measure of openness, which is exports relative to GDP, and just take China, which of course, as we know, has decreased its demand for imports due to the slowing growth in China. So the connection between Germany and China is 2.5% of the German GDP. So Germany exports 2.5% of its GDP to China. So an external shock from China is going to impact the German economy, for example, a lot. The difference is with the US, the number is 0.6%. So of course, it's not just China. Actually, over the last year, the euro has appreciated against the dollar by more than 10%, close to 12%.
Vania, can I just jump in here and ask quickly about China? I keep hearing that the slump in China is affecting other economies badly, and everyone's kind of writing off the economy there. But aren't they pulling out some real stimulus now? Isn't it possible that the Chinese economy does start to pick up?
Well, they've been kind of trying to do it for a while. I don't think they're proposing anything new. I believe that China is on a downward trend. We're talking about a trend here rather than a temporary, essentially one blip deviation from growth. China cannot grow the way it used to for a number of reasons, which are quite long to discuss. So I do believe that actually the trend will persist in China.
Okay,
sure.
I just wanted to get that straight. I
Yes,
believe you. I just have been a little bit confused because we report on every stimulus move like it's a huge deal. Like, oh man, they're cutting the triple R reserve ratio, and they're funding little kids and old parents, and so. But I hear you.
I think it's important actually to zoom out and look at not just the recent news, but a compilation of news and trends. I mean, that's kind of what we do usually in econ, not just focus on a single news. Speaking of trends, going back to the euro, an appreciation of the euro of 12% is massive, right? This is going to impact the eurozone economy in Germany the most. Now, what else is different for Germany? So there are other major differences between Germany and the US, coming from the fact that Germany is primarily dominated by manufacturing. So manufacturing is still much more important in Germany than the US. So then the shocks associated with high oil and gas prices impacting the marginal cost of production for the manufacturing sector is another big problem, right? So those costs had to be passed forward to the final consumer for the manufacturing sector. So the prices of manufacturing goods had to increase more. So high inflation in Germany. Similarly, the labor tightness. So Germany has demographic problems. They have aging population, much more than the US. So you have seen the articles that the manufacturing sector is struggling to hire employees. Wage inflation is going to be higher. So these are structural differences that are here to stay. They're not going to disappear overnight, that are putting the US and Germany in a very different position. Now, this creates a lot of challenges for ECB, of course, because Germany is one of many countries in the eurozone, and the German economy is also different from Southern Europe and from other countries. So then the question is, what is ECB going to do? I do believe that in general, ECB tends to put a higher weight on the German economy, higher weight. That's what we saw during the global financial crisis, for example. Probably it will be the same in this case. Having said that, given that the news are high inflation above target and actually significantly above target, so more than 5% core inflation is a very uncomfortable situation for ECB. Even if the German economy slows down, even if there is a recession, I do not see how they're not going to keep increasing interest rates. We're not talking about inflation getting to 3.5%, and then having the theory that maybe they're targeting a bit higher inflation. We're talking about still 5% core inflation.
All right. How about the United Kingdom? What are we seeing in terms of the economy there, and what do we expect the Bank of England to do in response?
So for the UK, it seems that there's some evidence that the high interest rates are starting to bite. Having said that, the UK has the worst numbers in terms of inflation, in terms of private sector wage growth. I don't see them pausing for the time being. I mean, they cannot pause a disinflation rate. However, I do expect a recession coming the soonest probably in the UK relative to either eurozone and UK. It's unclear which one is going to come first, but definitely we will have a recession in the UK because they will have to keep hiking, and even at current interest rates, it's going to bite. Already starting to bite.
What do you think about the release of the strategic petroleum reserve last year? Didn't really affect the price of oil so much. Now we're heading back up there, even as these problems, of economic slowdowns hit whole continents like Europe. How does the oil price work into your forecasts for economic growth or contraction?
It's contributing to slowdown. So we saw that gas prices are starting to increase again. So let's see what happens with the winter. If we have a mild winter, it might not be as bad. If global demand slows down, this might offset efforts by oil-producing economies to decrease the supply, which of course OPEC has been trying to do that. So it is a function of both supply and demand. So it is a function also for the oil and gas producers do, in addition to what happens to demand. I don't expect them to reach the levels, of course, of last winter unless there is another massive shock. But definitely are going to put a downward pressure on the growth in the eurozone and in the UK as we enter the winter months, where we expect prices to increase a bit at least.
How about in Southern Europe? I'm thinking Italy, Spain. Those are economies that tend to be more fragile. And at least here in the U.S., we hear more about that from a weakness perspective. How are they faring in this environment?
Well, Italy is a special case. I wouldn't put it together necessarily with Spain these days. Besides Italy, other Southern European economies are actually having better numbers than Germany. They have lower inflation and better growth. So overall, actually, they're doing better. But if the ECB keeps hiking, of course, this is going to have an impact on those economies as well. The numbers for Italy do not look great. So definitely Italy, for a number of reasons, is an outlier at the moment. So that's where there'll be also political conflict, because further hikes are going to potentially upset politicians in certain Southern European countries if they feel they don't need these hikes. So this has always been the problem with ECB, right? We have a single central bank, many business cycles, no common fiscal policy. So usually the weight is on Germany.
Yeah, that's tough. If your biggest economy is your weakest, or one of your weakest links, that's tough.
Well, I mean, let's define weakest link. Surely the Spain, Portugal, Italy, Greece, those are going to be weaker economies over the longer term, don't you think, Doctor?
Oh yeah, of course. I mean, there is the trends and there are business cycle fluctuations. So when we talk about monetary policy, of course, the focus is on business cycle fluctuations, and that's where currently the divergence is such that Southern Europe is doing better than Germany. In steady state, of course, the fundamentals, you can say, are better for, countries like Germany than Greece or Italy for sure. So
right. You notice I didn't use the term pigs.
Why would you?
Yes, I do not like this term. It's a very
Portugal, Italy, Greece.
Yes.
Oh, yeah. That's
it's good. Actually, I think Portugal, Italy, Ireland, Greece, and Spain.
Easy on the Ireland thing.
Sorry.
All right, Doctor. Thank you so much for joining us, Dr. Vania Stavrakeva, professor of economics at the London Business School. I appreciate getting the view of what's happening in Europe.